And good afternoon. Welcome into a Thursday, November 19th edition of Market Talk. I'm your host, Jesse Allen. Great to have you here with us. Find us online, markettalkag.com. And you can find us that way at Facebook, Twitter, Instagram, and all your favorite podcast sources. Let's dive into the market trade here on this Thursday. Let's bring in our friend John Heinberg with Total Farm Marketing by Stewart-Peterson. John, good to see you.
Good to see you again, Jesse.
Hey, John, let's dive right into this thing here today. Pretty quiet day. Soybeans were up just a tick, corn down, wheat kind of led the marketplace lower. But livestock had a pretty down day as well. I think let's start on the livestock side before we go to the grains. We saw down numbers in cattle and hogs. Why don't you start with the cattle market? What's going on there?
A lot of little moving pieces. First off, let's go to the bright side, or what's looking really good right now. The demand side of this market has been very, very strong. We saw weekly export sales numbers come out this morning, and they were record or market year highs for both shipments as well as sales for 2020. Throw another chunk in for 2021. Saw some really good demand, and that's kind of been reflected in that cattle retail price lately. But we've got some things that are kind of weighing. We can't seem to get a bid up in the cash market, so that's got the market a little bit on the defensive. Had a bit of a technical breakdown today as we kind of lost some support levels. Then on top of it, we heard some whispers, nothing really confirmed out there about the Greeley plant in Colorado dealing with some COVID cases. Nothing in terms of a closure or anything, at least in the headlines yet, but that might be something that just bringing some caution in the market. And it really kind of weighed on the whole livestock sector completely today. So that's just going to be something we're going to have to keep an eye on here. Do we have a situation like we saw last spring again? I don't want to predict that. I think our market's a little more prepared for those types of things this time around. But throw in also, too, a cattle on feed number coming out tomorrow. So today may have been one of those days that we saw some risk off, some squaring up of positions. And then, like I said, that technical breakdown causing the prices to kind of wash out here, losing $1 to $2 plus today in the cattle market.
Sure. And, looking yesterday, we saw a little bit of activity in the country. We saw some live sales, fat cattle around 110. But, again, you kind of alluded to it, really no activity today, and just kind of that breakdown seen in the market. Not a good sign for cattle producers, hoping maybe to rebound tomorrow as we end the week.
Yeah, we'll have to kind of see what happens here, as we get through that cattle on feed report tomorrow. There's a couple things that are starting to give me an idea that we got a little bit more of a manageable supply side out there, and that report should reflect that tomorrow if it hits the expectations. And then just talking to cattle producers, they're through the big cattle here. And so with that, we're seeing feedlots maybe getting a little bit more current, and that could put a little bit more pressure on the packer to bid up on those prices. So we'll have to see if that's the case going forward. But again, keep an eye on the headlines when it comes to these cattle markets right now.
Let's switch to hogs. There was a down day there as well. And just looking at this market, kind of talk about what's going on with this hog market and why the sudden losses we're seeing here today.
This is all about a supply side of the equation. We've got a lot of production coming through the pipeline right now. You look at weekly slaughter runs, are about 2.4 million head a week, which is kind of back to the top of the range. Actually, even last week, if you take the average of the last 4 weeks, 586 million pounds of pork has been produced. That's the largest 4-week average that we've had in history. So we're pumping some pork into the system right now. Then today we saw some very weak export sales numbers, again, very toward the bottom of the range in that regard. So there's just a lot of concerns that we got a lot of product here and it's not moving. That could be just weighing on that whole cattle complex as well, too, as you got that competing meat out there. So that's what we're kind of got to work through here. Typically, fourth quarter is a quarter that we see a lot of hogs coming into the slaughterhouse, and that's definitely being the case this year. And then now we got to keep a close eye on the demand going into 21. We've built up thinking we got this strong Chinese demand, and if that doesn't get materialized because they're catching back up with their hog operations, it could be pretty heavy on prices going forward for that hog producer.
Yeah, for hog producers and for cattle producers, COVID obviously is a big topic, and now with new shutdowns and worries there, I would feel that's going to really play heavily into the market here the next few weeks.
That's, again, the headline news is going to stay out there, and it's a reality. It's here. Again, you're hearing things in New York City in terms of restaurants closures. Here in Wisconsin, governor declared a state of emergency, basically trying to kind of cancel out the whole Thanksgiving holiday here in terms of people getting together. And that's just going to be something that the meat market is not going to like. So we'll have to see how that plays out overall. With that, though, if we're back in the houses, we're seeing good grocery store retail demand for both pork and beef, and that still can be a lifesaver over top of that restaurant demand that we lost. Is the fact that you can go to the store, pick up a pretty good piece of meat, bring it home and cook it yourself and save some money there.
John, let's switch over to the grains. Wheat was down today. That seemed to kind of drag the corn market lower. It looked like to me. I know KC wheat was the largest percentage loss among the grains, a 9.25 cent drop here on Thursday. Talk about this wheat market and what's going on there. I know it's been a weather market lately.
Yeah, it's been a weather market, and we're keeping a close eye too on the technical side of the equation. Typically, there's a window we see pressure in the wheat market anyway. Overall, you got a global supply that is still relatively heavy, so that's just going to make it hard for prices to rally. And on top of that, like I said, some improved weather in the southern plains and that KC wheat belt in terms of some weather forecasts and some moisture coming in just kind of builds a fairly negative tone overall. I'm not sure if corn leads wheat or wheat leads corn here in this situation, but they do kind of tie together pretty closely here, being, again, competitive type grains. But again, you look at the historical side of the equation, wheat typically has a tendency to slide lower. And with that global supply where is that, as well as this week's export sales numbers are pretty dismal for wheat. So again, the downward side looks like be in front of us here. Be careful if this chart decides to break down here this week and the next, that we could see some real push in that wheat market going into the Thanksgiving holiday.
Yeah. Let's switch over to corn since we were kind of connecting wheat and corn there. And I know yesterday we broke through that 425 resistance. We closed below it today. And now is that going to be a signal that we didn't truly break through that resistance mark, or is this just a hiccup in the market trade today?
Well, yeah, I kind of got to look at the price action today. It actually wasn't too bad, given this weakness in the wheat market. And the other thing going on right now, too, December corn options expire tomorrow. So this market has a tendency to go bleed out the value of some of those options that have a lot of what we call open interest, where there's open contracts. That 420 area, 410, $4 has a lot of those open contracts there. So that could be some of the reason we saw that really good strength yesterday, and then all of a sudden it just kind of faded off towards the end of the day, as now maybe we're starting to build that options expiration in. So we'll have to kind of watch what tomorrow gives. Don't be shocked. We see a bit of a push tomorrow to go get the 410 calls that are got value in them. So that could give us some volatility, merited or not. We'll have to watch. The story in corn, though, again, very good demand, solid export sales and shipments again this week. Still keeping things towards the top end of the range. That's very encouraging. We're kind of now through the harvest pressure window here, so now we're looking at that cash market. The cash market still is looking for corn as the basis level stay friendly. It wouldn't be surprising we see the market drift back in this window, especially if wheat does break. But I think we're going to stay relatively supported. It'd be nice to see December kind of hold this 420 area, and I feel a little better about things. But it's again, I still think our story is a little bit better to the upside as we go forward, but it might be a little choppy, at least now, maybe into the end of the year. But don't be surprised, though, if we get through options expiration, we get some friendly news that this market decides to kick it in and throw another leg to the upside in.
John, let's switch over to soybeans. That market was nice to producers today, a little bit anyway, and we're continuing to kind of chug towards that $12 mark on the futures trade. Today, though, much like yesterday, led by another high in December bean oil. What are you seeing in this soy market?
When we talk about good price action, today really was very good price action in beans. I mean, you woke up this morning, we're down 15 cents or so. Looked kind of scary, like maybe we got a bit of a rollover and a correction coming. Here we finished in positive territory. I know it's not much of a gain, but considering where we were, that just again tells me when we get a dip, the buyers are stepping into that soybean market. Again, we got to keep an eye on the products. That's a big key. We saw meal try to get through the $400 per ton level yesterday, failed there. If that breaks, that's going to give us some really good buy-in support. Then you got the oil market, which is basically that edible oil market globally has got a lot of money flowing into it, as we've got issues with Malaysian palm oil being tight, and they're switching over to soybean oil as a replacement. So I'm looking at that market. I can really like the price action today. We'll see how things kind of finish out the week. It does feel like we're got a better chance of getting to 12 than we do 11.50 at this window, because the demand stays strong. Even though export sales were a marketing year low at 1.2 million metric tons, that's still a pretty doggone good number and still above expectations. And the biggest thing is those shipments keep moving, and that's the biggest thing we need to see. Because if those beans are out of here, they're not going to get canceled come February when the South American crop comes online.
Mhm.
And then you still got that little wrinkle. The La Nina forecast seems to be really setting home in South America. There are some issues that are developing. They're still going to have a very good crop, but may not be the bin buster that they were forecasting here a couple months ago.
Yeah, and I think that's one of the big keys that a lot of people are watching is the weather continues to be not that great in South America, and it's going to help support prices here in the U.S. As we move forward. It'll just be interesting to see how much or how worse off that South American crop is going forward if it's kind of stays where it's at now or if it gets worse.
And the other thing too, we got to look at that stockpile that the USDA has forecasted here for us in the United States. Stocks to use ratio is 4.2. Only 1 year, 13-14 marketing year in the last 25 years, it was lower. And there we traded $12 to $15 beans in that window. What a stocks to use basically means amount of available days of supply at the end of the marketing year. At 4.2, that means we have 15 days of supply in the pipeline. That is extremely, extremely tight. And right now, with the way the domestic uses is going, as well as the export side, that supply pile could get even tighter. And we're not even sure where we are in terms of the actual production. Historically, the USDA is high on their November carryout forecast for the marketing year. In multiple years, we've seen that come lower. So that's going to keep some optimism in this market. I'm not sure we're at the price yet we need to really ration supply. Maybe that takes place after we get that South American crop in and we can see what the global supply is. But right now, it does feel like this market could move higher. And I wouldn't be surprised if all of a sudden we get a little bit of friendly news and we make a significant move higher between now and the end of the year.
Be something to watch for sure. John, as we wrap up the week heading into Friday, if I'm a producer on the corn and soybean side, what are some things we should be watching or maybe doing here for marketing as we move to the end of the week?
It's extremely difficult when you got prices moving at these levels, a lot of volatility in the market. The biggest thing I continue to tell producers is focus on the cash sales, set some targets. Don't be afraid to let things go. Okay, don't be greedy in this market because it can rip back very quickly. Find a way to shift that risk one way or another. So keep focused on there. And then right now, too, we're going to get some opportunities to start thinking about 21. Make sure we're staying active and get those targets set. And then make sure you find a way to shift the risk away from those bushels or away from your transaction into some other type of form.
Well, John, if producers want to reach out to you at Total Farm Marketing by Stewart-Peterson, get a little help with their marketing, what's the best way to do that?
Sure, Jesse. I'd love to chat with them anytime. Give us a call at 800-334-9779, or feel free to shoot me an email at jonh@totalfarmmarketing.com. And again, don't forget to check out our website, totalfarmmarketing.com. A lot of great information there, as well as a lot of different strategy tips and things to take a look at.
Well, I appreciate the time as always. We kept it short and tight today. I know we're both working on some deadlines, so I appreciate the insight as always, John, and we'll talk to you again soon.
Thanks, Jesse. Talk to you very soon. Have a great day.
John Heinberg with Total Farm Marketing by Stewart-Peterson, our guest today here on Market Talk. Find us online, markettalkag.com, and on your favorite podcast sources, including Spotify, Apple Podcasts, iHeartRadio, SoundCloud, and more. This has been the Thursday, November 19th edition of Market Talk. I'm your host, Jesse Allen. Have a great afternoon.